Hey, good afternoon. This is Trader Tim from EminiMind, and just doing a quick Monday market analysis video. It is the 29th of August, 2022. This coming weekend will be a 3-day weekend, Monday being Labor Day. So, as we head into, we'll get the first part of September later this week. I'm really looking at this full 50% retracement long on the ES, just under 4,000. It's a 39.83 and a quarter. And just wanted to touch on a couple things that I saw from the end of last week. I did not buy puts ahead of Jerome Powell speaking on Friday. I probably should have. Pretty much every time he's spoke this last year, the market has not reacted favorably. I was looking at this low back here as the swing low. And we didn't actually break that ahead of the sell-off on Friday. And so if you were to draw a 50% retracement like so, that 50 lined up right with a larger daily 50. And so I was kind of hoping for one more day up on Friday. I probably should have just bought them ahead of the kind of conclusion of the Jackson Hole summit, but I didn't, so didn't end up capitalizing on that down move, but there will be more. So one interesting thing to look at is the VIX, and today we're 10 minutes or so till the close, and the VIX has actually come down today after a strong move up on Friday. We're kind of at that upward trend line, the underside of this trend line. So I would want to see the VIX breaking back into the 30s if we're going to get some kind of sustained move to the downside. The little bit of downside we have between here and the 50% could easily be taken up in one day with either another gap down and then a bounce, or if we just drift lower to it, close, and then the next day you watch for that intraday reversal where you have like the hammer formation, and then you sell off a little bit intraday, and then you rally into the close. If we get a gap up following that, that would be one to buy. You want to buy a gap up at lows, because that can be the start, kind of the jumping off point of a new uptrend. I don't really, I'll watch the next 50% retracement short. That would be something like this, as opposed to, you could draw a smaller one like that. But I'm not going to aggressively sell there because we have this 50% up here and then the other 50% long below us. It's more than likely, if there is some sideways movement, we would bounce between the two 50s like this. But we just really have to get to September 21st, which will be the Fed meeting announcement in September, and then we should really see whatever the fall trend is going to be, whether it's up, down, or sideways. That is the time where things should really get kicked off. One of the interesting things that I'll close with here is that when people are expecting something, they can take precautions. So with all of this, to use the word hawkish tone that the Fed is using about there's going to be pain, we're going to have to raise interest rates, people, companies, they've been preparing for, a slowdown in the economy. Yes, technically the economy or the GDP has slowed for at least 2 quarters, so we are in a technical recession, but really it's all about jobs, and it's all about the ability for individual people to repay their debts. If you can't repay, then your asset is going to be taken from you. So think foreclosures and that sort of thing. But as long as people have jobs and there's ability to get jobs, do work that pays, then there's really not that much of a risk of a major economic collapse. We also have all these companies and businesses who have been preparing for this slowdown, and even the companies like your Targets and your Walmarts that have come out and said, yeah, we have tons of oversupply now of items that people aren't necessarily as interested in, furniture and stuff that during the pandemic everyone was buying up so quickly. it doesn't necessarily mean that they are going to have a slowdown in their profits for the next quarter. Because if you think about it, all of that inventory that was already purchased has already been accounted for. And so you may have a few less items that people really want right now, but the margin of goods, of the, let's say, take Walmart, if they don't have to buy as many goods going into the holiday season, they're gonna sell what they have. Maybe they sell a few less items because they didn't account for, the change in demand. The margin's still going to be very high because the cost of goods have already been accumulated and purchased. So I don't think it's going to be a super scary holiday season as far as profit and loss goes for a lot of these companies. But we will see. And that Fed meeting announcement on the 21st, that Wednesday in September, will be kind of a jumping off point for the fall. So if you do have questions, you can drop them in the comments below. You can always also shoot me an email, tim@EminiMind.com. Every Tuesday we do a live trading session, and if you want to sit down and do a one-on-one and just kind of refresh your trading or get things more tidied up, so that when as we get a couple weeks from now, when the markets should start seeing a step up in volatility and volume, you'll be ready. So feel free to shoot me an email, tim@eminimind.com, or drop a question in the comments below. Thanks, everyone. Have a great week.